Hey guys, hope you had a great week this week. So this week we had a lot going on actually. The Feds announced that they approved another rate hike. We knew this was coming, another 25 basis points. However, in their comments, they kind of left maybe some room for another one. They just kind of left it hanging there. I don't know if they just kind of want to take a to-go cup for the road. I don't know how they're approaching that. I don't know why, but and that's kind of their historical approach on these things. They're not going to be absolute. I think they're waiting to see what how the economy continues to respond. Speaking of which, the PPI came out this morning and showed that inflation is going down, as a lot of the other reports, and we've been talking about this for months. We've seen it coming. So hopefully, the totality of all these things happening, they will not only stop the rate hikes moving forward, but maybe start talking about a little bit of relief on that, maybe reducing the Fed fund rate. Now, the bond market has had a very volatile week, as we again talked about. We knew that we wouldn't have a straight line, on the way down, and relative to last Friday, our rates are about the same, depending on the program, depending on lots of different variables with borrowers. But yesterday wasn't very good at all. There was a bond auction, didn't yield up very good results for the interest rates. Today, PPI report showing some signs of progress, and so rates are much better today compared to yesterday. Although we haven't given back all of our gains, all of our losses from yesterday. What does this mean? Nothing new, nothing to see that we haven't talked about before. Rates are dropping in the long run, but if you're getting quotes from one day to another, there's no telling what you're going to see. We continue to see 8% on some charts, at least it's on the radar, but we're also seeing upper sixes, again, depending on the borrower, depending on the situation, the property type, all sorts of variables. And so just remind your buyers when they're shopping for interest rates that it's not just an interest rate that they need to be focused on. So many lenders will slide under the rug, points and fees that they may or may not need to pay or should pay. And at least at the least of things, make sure our buyers are comparing apples and apples, asking questions like, how much is this rate going to cost me? Are you charging me points? And making sure that if you are getting charged points, maybe you want to buy points, make sure you're getting the same quote from all lenders. Don't just say, hey, what's your interest rate? And somebody says 5.87 for 5% or 5.875%. And all of a sudden they get their loan estimate and they realize they're spending $12,000 to get that rate. So again, just be vigilant, help our buyers be educated, and make sure that we steer them clear from predators that are out there just trying to stick it to them in loan fees that they don't have to. Now, switching gears, I want to talk to you if you're a real estate agent, if you're interested in growing your business, and I mean substantially, getting maybe 2 to 3 times the listings that you're getting now and getting more buyers that you can help to the rate of 2 to 3 times the amount that you have in the last year. If you're interested in that and you've made it this far in the video, I would love to invite you to text me back and let's talk about some real tangible plans that we've seen already come to fruition with some of our realtor partners and how we can help you get more listings, get more buyers, and navigate this very difficult market, but growing your business at the same time. You guys have a great weekend and we'll talk soon.